Okay, ladies and gentlemen, the purpose of this video is to try to reinterpret certain parts of Toby's lecture, particularly with regard to auction for stocks. It doesn't have to be stocks, but in this case we're talking about stocks, and how that actually works. Now, this topic frequently causes confusion. You can say it's very hard and very easy at the same time. It's hard because if you don't understand what's going on, I can appreciate that you just get stuck and you can't figure it out. But once you can digest the simple rules and get an idea what's going on, it's actually very, very simple. So mechanical that you can in fact write a very simple little spreadsheet to price to automate this process. Okay, now let me just start by highlighting a number of rules, okay, in an auction. So first of all, it should be quite obvious that on the bid side, the buyer with the highest price has priority over everyone else, and the seller with the lowest price also has priority on the offer side. Okay, and if you let's just look at this example. So there's someone who is happy to buy 500 shares at the price of 251. Okay, so that's at the moment the highest bid price. Okay, so they have priority. Now, it doesn't mean that you will buy at this price. You may buy at a price better than this, okay, and when you sell on the sell side, then clearly these guys who are happy to sell at 252, the lowest price, they have the priority. Okay, but whether they actually do sell at this price or higher, okay, so either of them can do, because if you want to sell at 252 and we happen to give it to you at 253, then you should be happy. Okay, so first of all, remember that. Okay, so that's rule number one. So the highest bid and lowest offer, they have priorities. And rule number two, even if you have priority, it's okay if you manage to trade at a price better than your initial offer or bid. Okay. It is not okay if you put in a bid, let's say at 251. Okay, so you're happy to buy at 251, and somebody else managed to buy at a lower price and your bid didn't get executed. So this is just common sense. Of course you're going to complain. You're happy to pay a higher price, so how come somebody else can buy at a lower price before you can? Okay, so that doesn't make any sense. Likewise, for the sell side, okay, if you are happy to sell at a cheap price of 252 and somebody else managed to sell at a higher price but you don't, then there's something wrong. Okay, because it's obviously unfair. Okay, so that's rule number three. After that, you just have to make sure that all the rules above are observed and we manage to clear the maximum number of shares. And I'll show you in a minute what I mean by that. Okay. Now, at this initial stage, you can see that the highest bid is actually 251 for 500 shares, and the lowest offer is 252 for 300 shares. So the best or the most aggressive buyer is only prepared to pay 251, whereas the most aggressive seller the cheapest, is only happy to sell at 252. So what you actually end up with is a market where if I was to flip the bid offers upside down, okay, so you got 251, 250, 249, and on the other side you've actually got 252 offered, 253, I think it's easier that way, 254, okay, and the market is just going to be 251 bid, 252 offer, and it will not trade, okay. And sometimes you do see that temporarily. There's a bid price, there's an offer price. It looks as if the market is frozen in time, even for, like, 10, 15 seconds. That's when there is a bid and there's an offer, and they are kind of staring at each other until someone comes along and say, someone offers 600 shares, let's say at 251, okay, and someone offers to buy 500 shares at 250. Okay, now what happens when someone puts in these orders? First of all, on the offer side, there is no offer at 251, so this one is going to appear on the screen as something new. And on the bid side, there is actually a bid for 100 shares at 250, so now that's going to increase to 600 because there's 500 extra bid. Okay, so if you flip over to the next screen, this is exactly what you do see. Okay, I'm going to turn over to the next screen. Okay, so now you have 600 shares being offered at 251 and 500 shares being offered at 251 also. Now here you now have buyers at 251 and sellers at 251, and the maximum number of shares that you can match would be 500, okay, the lower of the two, okay. So the matching price obviously would be 251, that's the only price that can match, and the quantity will be 500, which is this one here. Okay, so what you see here is in the first instance, when the market was 251 bid, 252 offer, and things were kind of frozen with the bidders staring at the offerers, as soon as someone offers to sell at 251, matching the bidders at 251, okay, it triggers off a kind of equilibrium, or what we call clearing price, okay, which is the indicative match price and indicative match quantity. Now this is to say, okay, you have to remember auctions are a process where buyers and sellers are free to put in prices, but they don't actually trade except at designated points. So what you have is a price that will change, that will trade, okay, if let's say this was the moment of the opening auction or closing auction, okay. Otherwise it's just an indication. This is where the market is right now. Now things get more interesting when somebody okay, so there's a question at the bottom. What if I enter another offer for 400 shares at 250? Now notice on the offer side, the cheapest offer at the moment is actually 251. So this offer at 250 is likely to appear as a new entry because it is now the most competitive or the most aggressive offer. Okay, so you're going to see that at the bottom. and I'm going to flick over to the next slide. Okay, so here you have it. The offer for 400 shares at 250 now appears here. Okay, now here you have an interesting situation. Okay, so you have offer price at 250 and bid price at 250, offer price at 251 and bid at 251. Okay, so there are two potential prices that can clear. Which one do we use? Okay, that's the question here. Okay, now let's just suppose for a moment that we use 250. Okay, now first of all, look on the bid side. Okay, so the bid side, these guys are bidding at 251 for 500 shares. Okay, so they have the priority to buy. Okay, but it does not mean they must buy at 251. So let's just suppose that the clearing price or the match price was 250. Okay, so these guys here would be entitled to buy 500 shares at 250 because they are the bidders with the highest priority. Okay, now look on the other side. On the offer side, who has the highest priority? Well, it's obviously these guys who are happy to sell at 250. Okay, but there are only 400 of them. Okay, so that means if you use 250 as the clearing price, you would only be able to clear at a price of 250 for 400 shares. Okay, because there are only 400 sellers. Even though there are 500 buyers, you have to take the lower of the two numbers. Okay, now what if we use 251 instead? Okay, now if you use 251, this is what happens. Okay, so at a price of 251, okay, what's going to happen is all these buyers, 500, okay, will get their shares. And where do these 500 shares come from? Okay, so on the bid side, as I said, they will have priority. Okay, and on the offer side, these guys have priority. Okay, so the buyers will buy 400 shares from these offers, and then the other 100 will come from here. Okay, so if you offer to sell at 250, which is what these guys are doing, okay, and the clearing price was 251, so these guys, these 400 guys, they will not complain, okay, because they're selling at $1 higher. And these guys also, of course, they will not complain because that was their original bid. Okay, so you're going to get 400 of these guys who managed to sell at 251, and 100 of these will also sell at 251. Now, this 100 came from the 600 original offers, so it'll be based on a sort of time price priority. So whoever entered the order earlier, okay, will get filled. Okay, so remember what I said earlier, that you got to make sure that everyone is actually happy about how the market clears, and then nobody has a reason to complain, first of all, and secondly, you try to clear the maximum number of shares. Okay, so if you had a price of 250, you would have been able to clear only 400 shares, but now I'm able to clear 500 shares at a price of 251. Okay, now what happens next if there is an other offer of 200 shares at $250? Okay, Okay, so we flip over to the next page where there is now an additional 200 shares being offered at 250. So that makes the total offer at 250 of 600 shares. Now, what we have here is still a situation where at least potentially the clearing price can be 251 because there are bids and offers at that price, or 250. Okay, so which one is it? Now let's just say we use 251. Okay, now first of all, on the bid side, who has priority? Okay, these guys here, they have priority to buy. Okay, they put in an order to they put in the highest bid to buy 500 shares. It doesn't mean they must trade at this price, but it means they have to have priority. Okay, and then on the other side, on the offer side, these are the guys with the highest priority. Okay, and it doesn't mean you must trade, you must sell at 250. Okay, you can sell at a 250 or better, which is to say a higher price, but they must have priority. Okay, so given that these guys have priority and these guys have priority here, okay, so if you match them with a price of 251, okay, that means you've got 500 stocks that has to be purchased, okay, and these 600 here are happy to sell at 250, so of course they're also happy to sell at 251. Okay, but because there are only 500 buyers and 600 sellers, if 251 was the clearing price, okay, then only 500 shares will be cleared. Okay, now what if instead you use 250 as the clearing price? Okay, now like I said, in that case, on the right hand side, okay, so these guys have priority and there are 600 shares offered at 250. Okay, now on the left hand side, on the bid side, okay, what would end up happening is these 500 bids will manage to buy at 250 plus another 100 here will also manage to buy at 250. Okay, so this 100 from the 600 will be allocated on a time price or on a time priority. Okay, now these 500, they should not have any cause for complaint because they were happy to buy at 251 and now they can buy at 250. Okay, so that's more or less the process here. Okay, so let me summarize for you what happened. Okay, so if you look at these 4 slides, okay, so at the first stage there were 600 offered at 251 and 500 bid at 250. Okay, and as a result there was a clearing price where 500 shares will clear at 251. That's stage 1. Okay, now stage 2, there was 400 shares offered at 250 and this resulted in a clearing price of still 500 shares at 251. So things haven't actually changed at this stage. Okay, it's only when you get to the last page, okay, when there was an additional 200 shares offered at 250, only when that happened, this resulted in 600 shares being cleared at 250. So what you have here is actually a fairly accurate representation of how prices can actually move in reality when people keep offering and offering and offering. So there are more sellers than buyers, which creates sort of downward pressure on prices. And like I said, all you got to do is go back to the first page, look at those rules. Okay, the rules are commonsensical in the sense that you just got to make sure nobody has the right to complain because their priority is violated. Okay, so first of all, number one. Okay, number two, if you bid at a very aggressive or high price, okay, you have the highest priority, but it doesn't mean that you will always end up buying at that higher price. You might buy at a better price. Okay, likewise for the sell side, if you have a very aggressive sell order, a very cheap offer, okay, you have the first priority to sell, but you may end up being able to clear at a higher offer than what you put in. And that's what we're seeing here when there are cross matches between the bids and the offer. So one side will will certainly be better off than the other, for this reason. Okay. I hope this is helpful, and what I want to do is I think this is the best way, instead of just writing it down on in words. I think that also is not so easy always, and I create this video so you can look at it and think about it at your own time, with a bit of animation, and I hope this is helpful for you. Thank you very much.